It's great to see both of you. Adam, you first. 75? Is that what's going to happen tomorrow?
I don't know.
Is that what you think, though?
I don't think so, but it just depends how much they want to react to last week's CPI print. I mean, it feels to me real time like inflation has peaked, right? Whether you're looking at used car pricing, whether you're looking at home pricing, whether you're looking at select property rentals, some of the big ticket items have clearly peaked. So it's hard to know how much that lag. Clearly the market thinks the Fed's going to do more than they did last Friday, so we'll see.
Well, what do you think? Yesterday, Joe, was an accident that 75 basis point thing just fell from the sky? I mean, it felt like it was a deliberate effort by the Fed to get that into the market ahead of what's going to happen tomorrow. What happens if it doesn't happen tomorrow? What happens if it is 50?
I think the market would be disappointed. Listen, I hate to disagree with Adam. I'm a fanboy. Okay?
I like when you disagree.
I know you like when I know when
he told me he wasn't going to disagree with me.
But no, Adam, 75 basis points. I think is without question happening tomorrow. I think the headline inflation concern that we have right now is what you didn't cite, which seems to be the real problem. And I'm not sure how you fix that. How do you bring headline inflation down at this point?
I don't think it's by raising rates a ton. I don't think, as we talked about for a long time, I don't know if that solves some of the issues, right? It's not going to solve the fact that there aren't enough people working in certain issues, in certain areas. So I just said I don't know. It could be 75. I don't know.
No, but yeah. Doesn't it doesn't help with supply chain issues, but it does help with demand, which has made supply chain issues worse, right? More demand with less supply equals higher prices.
So crush the economy and then have to cut rates again next year. Fantastic.
That's really what you think is going to happen?
I don't see
75 basis points is going to crush the economy?
Well, I think if they're on the path to doing 75 and then a couple 50s after that, and they're really saying, hey, we have look, the market's telling you there's more risk of stagflation now than there was 2 or 3 weeks ago. I mean, look at the 2-year, look at the 10-year. The earnings estimates have still not come down. I think what's interesting, I focus on corporate earnings. I'm not like a Fed watcher, but I'd say January 1st this year, the S&P estimates right now are higher than they were on January 1st for 2022. That doesn't make logical sense, right? Commodities are up, the dollar's stronger, the economy's slowing. So I think the question is, what's in the price now about how much earnings will decline? Clearly, the estimates are for 9.5% year-over-year growth. That's not the right number. I don't know if it's 5 or 6 or 4. And if people think it's 4 and declining next year, how much? Like, that's really the debate on corporate earnings. What the Fed does, I don't really know, because I think sometimes they don't know. I mean, you know. I guess you know.
But that's the problem.
Yeah.
I think the market has a problem believing that the Fed is credible in their actions. I think the market has lost confidence in the institution. That has to be restored. However they need to do it, that has to be accomplished tomorrow.
It'll never be restored, for me, if they cut rates in the second half of 23 because they raised them so much this year. It'll be a never for me on credibility. So I thought, and we talked about it, that they would take a slower path as the economy slows and rolls over, not take a more aggressive one. That seems counterintuitive to me, but like Joe's saying, I guess that's in the price.
The market needs to believe again that the Fed has credibility. The bond market has been screaming that they don't. Yeah. The bond market has been screaming that they don't get it. The bond market has been screaming for them to do more. Yeah, what happened yesterday, and I want to talk to you about this credibility point because I think it's important. Yeah. Wondering whether the Fed loses credibility with this move because it feels like they panicked, or they regain it back because they're listening. They get it. Maybe they're late, but they get it. What do you think, Joe?
I think in January of 2019, markets applauded the dramatic communication pivot from Jay Powell at the time. Let's remember, he basically said on the first business day of 2019, he basically said everything except go buy stocks. He reversed his entire policy. So the market wants that right now. And I think one of the reasons that he has to deliver on that is we're talking about the Treasury market. You've had a move in the last 3 days for a 2-year Treasury where the yield has risen 60 basis points. Scott, that hasn't happened since 1987. What's the consequence of that? The consequence of that is that spreads are widening and we're losing liquidity in the Treasury market. That's a problem. We have to bring that liquidity back in.